James Edmonds from Praemium. Welcome to the Alternative Symposium.
Thanks very much.
First question for you today is, how do you define an alternative investment?
Yeah, sure. So, I think traditionally, alternatives were always defined in terms of their correlations to traditional assets, whether it be listed equities or bonds. But I think these days, people are much more interested in looking sort of probably a slightly lower level, which is what are they really doing that is different to those asset classes? Whether it be generating income, whether it be generating high alpha. I think people are getting much more intelligent about how they look at what an alternative investment actually constitutes.
And should alternatives be a single bucket or two buckets?
I think there should be a lot more than two buckets. The reality is, and again, in Australia particularly, we wouldn't consider real estate or property as being an alternative investment, and yet the reality is in other parts of the world, direct property, direct real estate is very much considered an alternative investment. I think within that big bucket of alternatives, you've got probably two clear buckets: liquid alternatives, which are much more accessible and able to be invested by relatively small portfolios. And then as you get more esoteric, you get into the more liquid end of the market of private equity, private debt, venture capital funds, where you need obviously a lot higher, a greater capacity to be able to make those investments.
And from a platform perspective, what trends are you seeing in alternative asset markets at the moment?
So sorry, we've seen probably three main trends over the last 2 years. So obviously we've really been in a low interest rate environment over the last 10 years, but obviously with COVID, we've seen interest rates go down to all-time lows, historical lows. And as such, we've got investors who are desperate for yield. They're looking for any source of income that they can actually find. And so we've really seen a trend towards investors going into any sort of type of debt fund. So whether it be private debt, mezzanine debt, doing first mortgage loans for investments. So just anything that can really generate income and pay, effectively make a payment. The other area that we've really seen is that investment into biotechnology. So obviously there's been a lot of investment into that sector over the last 2 years as a number of groups around the world have been searching for cures, and that's also led to a knock-on impact for technology groups looking at other areas of medicine and biotechnology. And so we've seen a lot of investors wanting to go into those areas. And a lot of the cases, that's because investors are actually from those parts of the industry. A lot of them are self-made people. They see the trends that are happening within industry and want to be a part of that. And then the third trend that we've seen is with blockchain. So blockchain and blockchain, I think to the average person is Bitcoin, but the reality is blockchain is a much broader technology that it really has a lot of different uses, such as decentralized financial platforms, smart contracts, and we're seeing a lot of interest from financial advisors and investors wanting to be able to invest into those, what is an emerging technology.
What role do platforms play in helping advisors get access to alternatives?
Yeah, so I think there's twofold. One of which is obviously making investments available. So we obviously spend a lot of our time and a lot of our effort is actually making investments as accessible, effectively bringing together the fund managers and the capital that's available to invest. And we do that through a number of different ways, whether it's through putting in place custody arrangements that allow for advisors to be able to invest easily and quickly into funds. Or by enhancing the reporting, being able to incorporate all the information into the end of year tax reports, allowing advisors to prepare for quarterly presentations to their investors. So we spend a lot of time in that area, really trying to integrate the data as tightly as we possibly can. I think the other place, and this is where platforms have really started probably moving into in the last probably 5 years, is actually providing administration support for investing into these more liquid assets. I think anyone who has ever made those investments and taken a look at this, for instance, like the subscription documents that you have to complete, I think there is going to be a place in hell for the people who actually design those, because the reality is every single subdoc looks completely different. And so if I was a financial advisor trying to prepare, say, 10 documents for my investors, I would probably tear my hair out and throw them out the window because it's just too hard. And then when you layer on top of that the increased burden around AML and KYC requirements, it's just becoming too difficult for them to be able to do that in a scalable manner. And I think that's where platforms are able to provide administrative support, because we provide scale. We can produce and complete the documents on their behalf. We can actually interface and work with the fund managers directly. So when it comes to the day two activities, such as capital calls or whatever the case may be, we're able to do that a lot more efficiently and take that administrative burden off the financial advisor.
And how important is execution in alternative markets for advisors?
Well, the thing with execution, particularly with illiquid assets, is you've got time. Invariably these are not time-sensitive transactions. But what is critical from an execution point of view is getting the documentation and getting the information right the first time. The biggest challenge and the biggest headache I think both fund managers and the financial advisors find is the constant back and forth between the parties, trying to pull together all the identification document that's required. If we're talking complicated structures on the investor side, such as trusts or whatever, a lot of that information needs to be provided to the fund manager, and that's where the importance of having as seamless and as clear transaction or execution capabilities is important.
James Edmonds, thank you.
Thank you.